Is there more advantage to buying a vehicle, or is there more advantage to leasing a vehicle? We're going to try and answer that question today. So the first thing we have to get out of the way is this is only really a big difference if you are taking the actual expenses of the vehicle as your deduction. If you're deducting mileage, there really isn't going to be a huge difference. The only major difference you're going to see is that, of course, a lease has limited miles, whereas if you purchase a vehicle, you can put as many miles as you want. So that comes down to how often you drive. Now, as we know, we can't deduct both mileage and actual expenses. So you want to take whichever one is greater. Now, bear in mind, once you start taking actual expenses and depreciating a vehicle, which I'll get to in a minute, you can't go back to mileage. So one of them is actually a one-way street. We want to keep that in mind. But getting back to the point, if you're deducting mileage, typically you're going to be doing that if the MSRP of the vehicle in question is less than $30,000. If you buy or lease a vehicle that's over $30,000, that's usually the threshold where it's more advantageous to take the actual expenses, not the mileage. So now let's get into how these are actually deducted. When you lease a vehicle, it's much more simple because you're going to deduct the payment of the vehicle. You're also going to be deducting things like your gas, your insurance, as well as your oil changes. You're probably not going to have much in the way of repairs and maintenance, but those fall under the category of actual expenses as well. But when you're leasing, you have a new vehicle, you're probably not going to have to worry about that. Now, here's the thing that's really different. When you purchase a vehicle, and pay close attention to this because I see a number of people, especially people with QuickBooks, they're putting their payments for their purchased vehicle on their profit and loss as an expense. That is not how you deduct the cost of an automobile if you purchase it. What happens instead is the way you get to deduct what it costs to purchase the vehicle is through depreciating the vehicle, not on the market standpoint, but on your tax return. And there's a couple different ways you can do it. It might be spread out over up to 5 years, which is the most common way, but there's also such thing as accelerated depreciation, which means you get to take either bonus depreciation or you accelerate the depreciation process in a given year to increase the level of your deduction. So, which one is going to have the biggest advantage is going to depend on which one you really prefer. If you take the lease, it's much simpler to deal with, easier to account for, and it's more of a straight up deduction. Everything just gets written off, period, assuming it's greater than the mileage amount would be, which if you're at 12,000 miles, do the math. At the mileage rate, you kind of have a fixed maximum on that, assuming you drove the 12,000 miles. Whereas if you purchase the vehicle, you're still going to be able to write off a similar amount because you're going to depreciate the vehicle no matter what in the case of taking actual expenses. But with purchasing the vehicle, you have a little bit more flexibility and the option to accelerate the depreciation process, and you can get a larger deduction in a given year than you might get leasing and just writing off your lease payment. I hope this video was helpful and gave you some insight that you thought was useful. Do you have a good idea for a video or a question you think we should feature in a video? Send your ideas to daniel@rottweilertax.com and hopefully you'll be seeing it in a video soon. Catch you in the next video.